What's up, you guys? My name's Henry. In this video, I'm going to give you guys 5 stocks that are safe for a potential downturn, especially since we have an election in about a month from today. If you're looking for high quality businesses you can buy during a stock market crash that won't destroy your gains and offer a safe haven, this video is for you. So you intelligent investors, we're jumping right into the safe stock number 1. An extremely safe stock to buy during a stock market crash is telecom giant AT&T. As a shareholder, the word boring comes to mind when I think of AT&T, and to a certain degree, they are kind of boring. Looking at the chart for the past 6 months, the stock has moved sideways. I mean, so sideways that exactly 6 months ago, the stock was just 84 cents higher. But AT&T is a dividend aristocrat that's yielding 7.3%, so we don't see all of that movement on the chart. That's because when you get paid dividends, it goes into your account as cash or reinvestment into the same stock. The stock drops by that dividend payment at or after the ex-dividend date. The cool thing is, even if AT&T does this for the next 10 years, at this rate, you can double your money with reinvestment in just a little over 9 years. Yes, I know it's not as schmexy as Tesla or as schmexy as Helion or something like that, but hey, I did say we were talking about safe stocks. These safe stocks you can rotate into if you want to lower your volatility during the election and potential market downturn as we get into the uncertainty in November. Also, despite a relatively low growth rate, AT&T does have some key catalysts on the horizon. Some of you guys that have Nokia or other 5G stocks are about to get excited. AT&T is rolling out 5G infrastructure. This represents the first upgrade to download speeds in about a decade. Chances are that we'll see consumers and businesses upgrade their wireless devices over a period of many years to take advantage of this grandfather network. Since AT&T's wireless division feasts on increased data usage, this will be a very good thing for investors and the stock. AT&T also recently launched its HBO Max streaming service, collecting roughly 4.1 million subscribers in its first month. Although subsidiary DirecTV has been contending with a steady loss of net subscribers, AT&T streaming options can more than offset these losses. AT&T is one of the safest stocks, in my opinion, out there on the stock market, especially for a very large company. Next, we have Nextera Energy. You'll note that basic goods and services are almost always a smart investment during periods of heightened stock market volatility. That's what makes the largest electric utility in the US, Nextera Energy, It's hard to pronounce, but they make good money, okay? The beauty of electric vehicle utility stocks is that you precisely know what you're buying into. Demand for electricity remains virtually unchanged when the economy and the stock market rise and fall. It really doesn't matter. In fact, the weather arguably has more bearing on electricity usage than the performance of the US economy. So at least the weather controls your performance rather than the stock market or the election. I wonder which one is safer. I mean, jokes aside, that is still real diversity, and this stock actually returned over 20% in the last 6 months. It started in July at $238 per share and currently trades at $288 per share. What makes Nextera so special is the company's leading investments in renewable energy. Though green energy projects aren't cheap, a record low interest rate environment is the perfect time to upgrade the company's capacity. Overall, no electric utility generates more capacity from solar or wind power than Nextera. So you EV lovers, this stock is in line with the shift to green energy. I'd love to make my next video on the best renewable energy stocks, so if you like the idea, like the smash button for Uncle Henry, it is much appreciated. Oh, and we will have a promotion where you get 2 free stocks valued up to $1,600 when you deposit $100 into your account. I have a link for that below. I think they're really good and they're very similar to Robinhood. You basically get 2 free stocks when you sign up, so why not take advantage of that? Number 3, as we have it, is Amgen. This is a healthcare stock, and if you watched my last video, healthcare does very well during volatile market environments. Amgen's annual revenue growth has slowed over the past few years as some of the company's older drugs face competition from biosimilars. Basically, as the name suggests, it's drugs that are similar but not exactly the same. But we have a new wave of growth on the horizon. Amgen's newer drugs like Otezla, a plaque psoriasis treatment, and Kanjanti, a biosimilar of blockbuster cancer therapy Herceptin. I've looked into some articles, and basically these 2 drugs could spark some new growth into Amgen. Amgen's 24 phase 3 programs in its pipeline are also really great for investor optimism. A successful drug will make a lot of money regardless of what the market environment is. In the second quarter, Tesla generated $561 million in sales, a 14% increase from the year earlier. As for Congenti, Amgen said that it's pleased with uptake and doesn't see competition slowing down market share gains. Congenti's share of its oncological market is around 35% according to Amgen. Recently, Amgen announced positive phase 3 data for a trial of its commercialized cholesterol drug, Repatha, hopefully I pronounced that right, for a new indication as a treatment for genetic diseases that involve the early buildup of cholesterol. And results from other late-stage trials are just ahead. This stock is up 20% in the past 6 months. It has a healthy dividend of 2.5% and a PE ratio that is very reasonable in my opinion of 20. Fourth on my list of safe stocks is Costco Wholesale. This is a safe stock to buy during a stock market crash. Warehouse Club Costco Wholesaler, ticker COST, and by the name you can tell they have a very good cost or prices, which is a good thing when people are in a pinch. Costco provides a one-stop shopping experience for consumers regardless of how well or poor the economy and the stock market are performing. Since Costco does a lot of its purchasing from vendors in bulk, it's able to buy goods at a cheaper unit price than many of its competitors. This is one reason why Costco is able to undercut its competition on price. Also, last time I was there, I noticed they didn't even offer bagging, so technically this is a green stock and they save tons of money on bagging, increasing their margins. Another fantastic reason I say this is a safe stock is that Costco is built on the membership model. The high margin fees collected by Costco from annual memberships is significant cash flow and supplements the company's razor-thin margins on the consumer staples products that they sell. Whew, that was a mouthful sentence, but basically consumer staples are things that consumers need, such as toilet paper, food, household items, and etc. All those things. By keeping its retail prices so low, Costco is courting, and I mean like creepily courting, new and existing customers in acquiring their loyalty, frequent customers, which means consistent income. Similar to what I am doing with options in the course that I am building, weekly income trading options, I update everyone in a week or two. So as I get closer to launching on November 1st, do drop your email in the free submission form below. Costco has historically done an excellent job of keeping its customers within its ecosystem of products and services. That's what makes it such a smart investment and buy during periods of heightened volatility, and I can't recommend the stock enough if you're looking for a safe investment. The dividend is less than 1% and the PE is 39, which is a little bit high, so that isn't necessarily a value stock, but the momentum should continue as Costco adds more customers and opens up new stores. Number 5, give me a high five. We have Target is another example of a company that won business while most other companies lost sales during the height of the pandemic. Some might say it's because Target sells a lot of essentials, but there's more to the story than that. Target leveraged both physical stores and its web stores to produce online results. Target has some smart business leaders because online sales are crucial, especially for businesses in the 21st century. Nonetheless, more than 90% of sales growth in the second quarter involved in-person stores in some way or another. Examples of in-store sales include a purchase made inside a store or the pickup of a digital order curbside. As a result, comparable sales climbed more than 24% in the quarter from the year prior, making the company's biggest increase ever. And digital same-store sales soared 195%. Importantly, the high-margin category of apparel, which saw sales decline in the first quarter, recovered and posted double-digit growth. This indicates that consumers weren't only going to Target for emergency needs during the worst phases of the crisis. Instead, they've continued to visit the retailer for all of their shopping needs and return as normal customers. Looking ahead, Target's effort in grocery is another bright spot and has been a bright spot for Walmart as well, which is their competitor. The company launched the Good and Gather brand a year ago, and it already reached $1 billion in sales. This fall, the brand will launch another 600 items to bring the product total to almost 2,000. Target has also added fresh and frozen groceries to its pickup and drive-up offerings at 85% of its locations nationwide. For the past 6 months, Target is up over 60%. The momentum in this name is insane. The PE is only 23 though, so I can still see more room to the upside, or at the very least, decent performance due to the online sales segment. All right, that's 5 stocks to be safe during a potential market crash. I wanna make sure my YouTube family is Gucci regardless of the market environment. I'll be back with another video in a little. Stay safe, be aggressive in learning, and most importantly, be safe in investing. You know what? Give me that fist bump.